increased costs, bare shelves, and postponed orders. For American customers, this might soon be the norm. "I don't want to travel to the United States" is a common reaction. "I don't want to do business with them." President Trump has stated that. He's proposing a new 50% tariff on all imports from the European Union because he doesn't want to spend my money. Quietly but quickly, a huge thing is happening in the retail industry in America. More than 15,000 retail establishments have closed. In the US, in the first half of 2025 alone, which is twice as many as the previous year, Target has reduced shelf space, Costco has canceled bulk orders, Walmart has closed additional locations, and Apple has been severely impacted since President Trump threatened to impose a 25% import tax on iPhones manufactured outside of the US. Overnight, Apple's shares fell by around 4%, wiping off tens of billions in market worth. Why is this taking place? Because there is hardly any room for the $100 worth of food that used to fit in the shopping cart. It's more than just inflation. This shakes the system, and it begins right at the top. You can detect that something is going wrong with America's retail lifeblood without having a degree in economics. Not only are prices rising, they are leaping. A rotisserie chicken, which for millions of people represents affordability, increased in price by $1.50 overnight at Costco. No unique packaging, no announcement, just higher prices that are passed directly on to the customer. Furthermore, that is not an isolated instance. Now it's a pattern. Customers are discovering that familiar products, including cereal and socks, are either no longer available or have been replaced with less durable, less priced substitutes. Additionally, Walmart has been secretly closing stores not in the news, but on the ground. Places that formerly served as the backbone of entire communities are now forever closing. The business attempted to soften the message by referring to it as optimization. Even insiders now acknowledge, however, that it's a reaction to something more profound. What changed then? The retail behemoths in America operated like clockwork for decades. Supply chains around the world kept shelves stocked. Prices were maintained low by buying in bulk. Additionally, consistent forecasts were a result of predictable trade policy. However, the foundation is currently crumbling. Additionally, the cracks appear at the point of sale. A grocery run of $100, it only gives you around 65% of what it did a year ago. It's more than just inflation. Economic displacement is what that is, and middle-class families are the ones that are most affected. Those who are unable to stretch their earnings but do not qualify for aid. The system doesn't break all at once. 1,000 little shocks, increased import prices, broken supply chains, forced store closures, a decline in product diversity, and, worst of all, no indication of when it will end are all contributing to its steady collapse. This goes beyond a single item or business. It concerns the gradual, painful loss of regularity in Americans' daily lives. And nobody is discussing that aspect. Gas, food, and insurance are all on the rise. What is causing this retail decline then? Not a pandemic, not a natural disaster, not even a work stoppage. The trade war has been drastically enlarged, reloaded, and restarted. One of the most aggressive tariff campaigns in contemporary economic history was initiated by the US government in the beginning of 2025. First, all imports, regardless of category or place of origin, were subject to a general 10% duty. Next, followed targeted attacks, a 25% tariff specifically targeted at smartphones, and a 50% tariff on European imports. It was a clear and loud statement. It will be significantly more expensive if it is not manufactured in the United States. The world also didn't remain quiet. Canada, the European Union, and China retaliated with their own levies. Many were specifically directed at the US farm and consumer markets. The result was anarchy throughout supply chains, which had been developed. Over many years, once smoothly flowing goods into American warehouses were suddenly halted at ports, diverted via more costly routes, or canceled completely. Retailers with large volume models and narrow profit margins, such as Walmart and Costco, were caught in the crossfire. Due to the increased tax burden, Walmart had to quickly find new suppliers because many of them could no longer afford to supply. Costco, which usually uses a lean logistics methodology, began making weekly order adjustments as expenses continued to rise. The outcome is a smaller assortment of products, fewer brand alternatives, shelves that appear full but aren't, and a consistent increase in the weekly price of necessities, in the hopes that customers won't notice. Some businesses are even switching out high-end products with off-brand alternatives. However, the suffering wasn't limited to retail titans. One of the most recognizable American companies, Apple, unexpectedly finds itself at the center of a political dispute. The U.S. does not produce any of Apple's iPhones. Production is dispersed throughout Southeast Asia, India, and China. However, President Trump has stated that a 25% duty will be applied to all devices that cross the border if Apple does not return iPhone production domestically. According to analysts, the cost of an iPhone might increase threefold, from $1,000 to around $3,000, if Apple were compelled to move all assembly to the U.S. Additionally, the market reacted instantly as investors started to pull back, uncertain of how the corporation could handle such a radical move. Apple's stock fell precipitously, losing billions of dollars in value. This was about more than one business. This served as a reminder that no brand is too large to be affected by the policy storm. Additionally, the effects of any new tariff extend from Vietnamese suppliers to Californian warehouses. With smartphones in everyone's pockets and local Walmart aisles, this is no longer merely a trade tactic. The entire global retail system is being put through its paces, and that machine is crumbling at the moment. The warnings were no longer subtle. By June 2025, the U.S. administration publicly threatened to slap a 50% tariff on all imports from the EU, which would have a significant impact on consumer electronics and auto costs. And Apple was the next target. A few days following that statement, President Trump announced in a high-profile speech that the nation's trade sanctions would no longer apply to iPhones manufactured abroad. Apple would be subject to a 25% import tax on all of its devices if it didn't start moving its manufacturing back to the U.S. It was more than simply a headline. It served as a warning to all multinational corporations that continue to conduct business overseas. The message was unambiguous. Either reshore your production or face the consequences. However, the harm was already spreading throughout the supply chain by that point. Retailers were already in triage mode in May 2025. The cost of wholesale had increased. Every week, price tags were being updated. Large bulk orders, inventory reductions, and even staff reductions, particularly in logistics departments, were implemented by grocery chains. Costco put a stop to its projected growth. Walmart secretly terminated supplier agreements because the expense of maintaining inventory was beyond their capacity to turn a profit, not because demand had decreased. Retailers that were accustomed to making razor-thin profit margins were forced to pass that burden on to customers, since every dollar spent to bring items into the nation now included an additional tax. We discover the spark if we go back a month, to April 2025. At that point, the White House declared a broad 10% import tax that would take effect right away. There was no grace period, no sector exception, and no supplier cooperation. Like a policy grenade, it struck all merchants, from grocery stores to electronics, had to abruptly rethink their whole supply chain structure. The first to feel the effects were small enterprises, particularly those that relied on imported packaging or parts. Bigger businesses like Home Depot and Target triggered emergency contingency procedures. However, even with resources, they were unable to completely protect themselves, since the system on which they had depended, one that was based on steady imports, stable prices, and global sourcing, was now changing. The indicators were present as early as Q1 of 2025, but few people chose to accept them. Consumers started to notice little adjustments: lengthier resupply delays, fewer alternatives, and smaller packaging. The weekly shopping runs began to cost more without any apparent explanation, and the customary seasonal sales felt thinner. Although it wasn't a catastrophe yet, it was a warning. The economic crisis had entered its calm phase. Families made quiet adjustments, cutting back on known essentials, avoiding certain brands, and postponing improvements. Since there was no issue with demand, retailers were unable to provide an explanation for the decline. Before the cost storm, all was quiet. The system had already begun to fail by the time the news media caught up. This wasn't a single poor, weaker choice. A series of economic tremors occurred. Each one causes the foundation to tremble a bit more. Additionally, it was impossible to ignore the aftershocks by June. Halfway through 2025, the storm no longer acts as though it is far away. Once the gem in the crown of the global tech industry, the smartphone market is now stagnating. Growth projections are being cut. New versions aren't selling out quickly,